Good morning. Merry Christmas to everyone. 12/18/2012. Reminds me back in July of 2012, we have the fiscal clip and we have the S&P right up here. I'm going to do the S&P 500 just to give everyone an idea of what's happening here. There is no fiscal cliff. It's in December. It's the time that they take these markets back up to the high. The calendar 2012 highs, based on the fact that there is no deal, we're no better off than what we were. However, they understand that 2013, there's only 8 trading days left in the calendar year. And this whole calendar year of 2012, the way that the high frequency model was used in bidding stocks up is that they take the bad news and they bid them up. They have a certain time to bid them up before the end of the calendar year will come into play. These are the things that we have said within price volatility. We can clearly see that we had the 3-week reversal. Then over here, we've had 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. 6 weeks ago when we were hitting our bottoms here, we had that rally, and it was a Thanksgiving light week rally. Same thing applies here, same rule. Once again, it is the month of December. So on 11/11 week, and on that 11/16 week that went up here, we rallied up during the holiday period. Once we got up here from these lows, we've been range bound and coming down on the S&P 500, and now we're at a major wall of resistance. That what I'm going to move is this is where we were before, 1440, right below it. And from 1440, from that high, the previous week with all the deal making, we went from 1438.59 right down to 1411. There was a pullback here. And the prior week before that, the high was 1420 and they pulled it back to 1398. The high this week now is 1430.67. We haven't breached the top of that 14 to hit that 1440 area. We said that a month ago that December volatility without a deal is that you could come back up and hit 1450 on the S&P 500. Based on the fact that everyone is sitting on the sideline and the high frequency buy and sell tape in the cash futures are moving these things higher along with the broader marketplace. Names are moving higher because this is how they do it. And they do it in the order of taking no news and bidding it up. When we get news that they have come to an agreement, which we don't think will be the most rewarding agreement, is that it becomes time where you will sell into that. And that the December volatility and New Year's volatility is here. There is 2 sets of volatility. One is to the upside, as we can see here. The S&P is working its way up. On the Nasdaq 100 right here that we went over, and the reason why we're not short the Nasdaq 100 is because the 26.75 put that expires Friday was $30 on the close, and it's hit $9.48. We will buy these very wholesale because it will be, when that news does come out, this side of the market's going to be the cheapest side of the market, meaning that they've walked them, they've marked them up, so the long side and the call side is marked up, but the put side here is marked all the way down within the volatility, and that's how we'll take these trades on Nasdaq 100. Nasdaq 100 will have a wall of resistance here at the 20-week simple moving average. We can see where the lows were. We can see that they have bid these up because they are caught in these markets. They got a new year coming up, and volatility is to walk them higher and then sell the news that's coming around the corner. On the Dow Industrials, we're right up here at the major top of the whole broader 2012 calendar yearly movement, and we're at the wall of resistance right here on this weekly chart. They managed to go ahead and get this above this 20-week moving average and the 10-week moving average, which was holding support on the Dow Jones. On the Nasdaq Composite, you can clearly see here where we put in the bottoms. This one's been lagging a little bit. We're coming up to that major wall of resistance. We will be looking at the lower on balance volume that is in the whole movement. So here we have the markup in the Nasdaq Composite 29, Nasdaq 127, Dow at 81 handles, S&P 500 marked up. We are headed to that 1450 area, up 11 handles. There is no deal. And like I said, the way that volatility is created in these exchanges is beyond most people's comprehension. Why is that? Because they have a certain plan that they use. They use them during holidays. Doesn't matter which one. Right now, there's 8 trading days left in the year of this calendar 2012. And it is the time of year that stocks are supposed to go higher. And December is seasonality. This time of year is the second strongest month of the year. The thing that you have and that everyone is facing is that a lot of people still remain on the sidelines, even though that you see the big positive tape. I will tell you, though, that the minute that that announcement comes out and they reach a deal, it's going to be time to unload, because it's not, a deal is a deal, but if the deal isn't as favorable, it's going to take a little bit of knock knock, who's there, anybody home, I'm sorry, growth contraction will remain for the first 6 months of 2013. They're trying to use the financials that have been beaten down 5 years in a row. We're at the same thing when they made their highs, and then now we're going into the 5th year, and they're trying to put all the upgrades across the board. It's the time of year because Wall Street is at its lowest levels. Their bonus plans are down the toilet. They will try to mark these things up, and there are certain gimmicks and procedures that are used. What we will tell people is that they continue to bid stocks up. We will go through some of the individual stocks. 2013 is 8 days away, and I will tell you that when 2013 starts, it's not starting like it did last year, gapping up the market and then running it for several weeks. In fact, it'll probably be quite the opposite, because the lower growth is going to be here for a while. The housing market and the financials, both of those key sectors have to be the leaders for 2013, which we hope that that could be the case. But that will take a while, because you can't have a bull market without the financials, and the housing market's already lived up to it. You've got Mr. Ben Bernanke. You've got people printing money around the world. You got Germany at all-time highs. You've got more money being printed and more liquidity being pumped into the system than any other time. And it's been our experience that people that use these mechanical processes in markets, there's times that they take advantage of them to get the stocks as high as they can. You want to be long those names and let them go up. When it's time to get to the major wall of resistance, like Apple did today at 726.46, we've had a great move up, and they've been going parabolically on very low volume. Today's volume, I would say, is a little bit higher in the 2-hour count at 1.99 million. But once again, this is the update that we have given on all of your major components, so that as we go into the calendar day, the rest of the today, which is a long ways from being over, is that we can see where these things are being bid up, and that the market is pricing in. That is all of that jumbo talk. They're bidding it up because they're going to sell them. And they have a chance to get out at higher prices than what they were having when this fiscal cliff started. A lot of people are already gone on vacation. And just like they did during the Thanksgiving week when it was time to be long, and I told everybody then to go up on light volume. But right after that, we had some pretty good sized corrections. There is no deal with Mr. Obama yet. Republicans and so forth. And this is how markets get bid up. So you let them bid them up until they can't go any higher, and then you get out. So you learn how to put these things in your favor. I will tell everyone on an all points bulletin that when that deal comes, which I don't think it's going to come before the 21st, the markets are bidding it up as if there is going to be a deal. But the minute that there is one, we're going lower. And we will have reversals. So you need to understand, never fight the trend. Let them use their mechanics and let them bid them up for you so that when you're long, but there's going to be a time you're going to want to get off board and you're going to want to sell. So there is the Dow, Nasdaq 100, Nasdaq Composite, and the S&P hitting the wall of resistances. So they bid them up into resistances. Then we're going to take a look and see what kind of volume, intraday volume, would push these through these indexes to get to these other resistance levels that I've already forecasted clearly.